What's good, team? Welcome back to a brand new video. And I was very excited to make this video here because this is the culmination of 6+ years of trading experience. This is the ultimate strategy guide for day trading. Okay, so I basically took my old strategy that I used to have and I was very profitable with. I've lived with it for 3 years, everything was fine. But I've simplified it because what I've noticed over the last year, even though I've been living off it and doing great, is that sometimes I was kind of overcomplicating it a little bit. Now, I've always been good with discipline, I've always been good with stuff like that, but here's where it kicks in, okay? Here's the strategy basically. Trend, bias, and draw. We're gonna start off with those. So you want to go, if you're day trading, you can pick a time frame you like, the 4 hour, the 1 hour. If you're swing trading, you can pick the daily, the weekly, whatever you want, right? So your trend, you look, right? Okay, this looks bullish. Oh no, let's not go on the 4 hour. Okay, yeah, this is definitely bullish. It's making higher highs and higher lows. This is most like this is all I need from the 4 hour. Okay, this is bullish, looking great, right? Drop down to the 1 hour. Same thing. We're gonna forget about this Friday move because this was caused by a tweet. Okay, so we're gonna go back a little bit. Okay, this looks super bullish. Overall, it's just been moving up. Who's been making the most money in this, right? This is basically what we're trying to find. Who's been making the most money here, the shorters or the longers? Most likely the longers, right? Then we're gonna go for bias. What's our bias for today? Let's say you zoom in, right? You look at this day here. Okay, we've been going down quite nicely. We've just came back into a nice area of this 4 hour kind of uptrend, reacting strongly off it. We're on this day here. My bias is to go take out this high, but before doing that, we're gonna take out this low, right? So the bias is this low first, and then this high. Now, this day is a great example because you basically get no trade, right? But the idea is still there. You need to have a bias. What do you want to see happen? Now, we're not trying to predict the market. We're trying to understand. Okay, I'm gonna see this low taken out, and then I'm gonna see a move up. Fine, perfect. What's your drawn liquidity? These Asia equal highs. Okay, so now you have your trend. You're looking for longs only. You're in a bullish trend. Your bias is to go lower and then higher, and your draw is this thing right here, right? That we're kind of drawn towards, right? Now, the whole strategy is basically based around trends. And the reason I say this is that the market is always trending on any time frame. Okay? So if you're a scalper, you can use your trend on the 5 minute, the 15 minute, whatever. All I'm saying is that these three steps are done on a little higher time frame, okay, than what you would enter on. Now, the idea is based on trends because where is the best place to enter a trade? Let's say you're long. Is it here? Fuck no. Is it here? No. It's right here, right? These are the areas where you want to enter your longs. And same thing can be said for shorts. These are the area where you want to enter your short. Now, how accurate do you need to be? Not that much, okay? But you still need to kind of enter here to kind of get the best case trades, right? So from there, once you figured out your trend, your bias, and your draw, you want to figure out where could the market react. Now, this is where ICT likes to throw around a bunch of words, a bunch of complicated words, even support resistance. Anything you want here goes, okay? So it could be a higher time frame value gap. It could be a rejection block, order block, OTE, equilibrium, any point in fib, any liquidity point, previous day high, previous day low, whatever you want, support, resistance, whatever you want, okay? This is where it goes, but based off this idea right here that this is what trend does, okay? So you're not going to look for a fair value gap up here. You're going to look for one that's down here. You're not going to look for, ideally you put a Fibonacci and you wait for equilibrium to get hit at the minimum. Now that's what I personally do. I do this, and then from there, if there's a fair value gap, there's anything, perfect. But all I really need to see is equilibrium. I need the market to rebalance this leg. This is usually kind of where I enter. OTE is basically like the cherry on top if we can get there, right? Kind of like SMTs. SMTs are also a cherry on top. I don't enter trades simply based off an SMT. Again, I trade based off the idea that trend just makes higher highs and higher lows. That's how markets move. This is an undeniable fact. Sometimes it chops, sure, but in that chop, there's always a lower time frame trend. Okay, keep that in mind. Now, with that being said, let's say we're looking at this here, right? Go down to the 15 minute. Where was I? More this way. There it is. This was the day. Okay, now imagine it did sweep this low. Okay, whatever. There's a fair value gap right here, down here, right? It could have had a nice reaction to. Would have swept all these lows. Would have swept the previous session low for value gap. There's a rejection block down here. there's a bunch of things where you can enter, right? There's an order block right here. Like there's a lot of things where the market could react. All you need to focus on is it in equilibrium range? Well, as you can see, actually, this one was. So this would have been a great entry on that order block right here, right? You put your fib, you look at where the halfway point is, equilibrium. Here are my settings for the fib, if you guys want to screenshot or whatever, right? And from there, okay, order block right here, fair value gap here, there's probably like an hourly or something somewhere, right? Or like a 4 hour or 5 minute, whatever you want, really. This is where you can get creative with it. You're past equilibrium, you're trending higher. Already the probabilities are on your side because your trend, your bias, your trend is there, right? You're bullish. Your bias is being respected right now. We're going back down. This was, again, guys, remember, this was the bias to go down before going higher, right? Now, your draw is higher, that's still fine. And again, with this way of trading, you get rid of FOMO because you're not scared of this move is going to take it out. You just wait. All you're doing is waiting, right? Trading is 90% waiting, and you guys are going to realize this once you get profitable. Trading is fucking boring, and all you do is wait. You execute, and it's very short, but what it does is that it frees up so much time and freedom, money freedom, time freedom, location freedom, that it's just all so worth it, right? So again, work at the market. Yeah, we have this order block over here. We have these lows. We have OTE. We have fair value gap. There's a bunch of areas here. A lot of ICT keywords that can confuse you. Pick one. If you want to just trade order blocks, strictly trade order blocks. Me, I strictly trade Fibonacci's. If there's something else, awesome. I don't care for it. Okay. Zoom in once you found your area. This is the order block. I'm on a 15-minute. Zoom into the 5. Right? How do I enter this trade? Let's say you did want to get into this trade. Okay, well, equilibrium is this the right day? I don't think this is the right day. Let me go to the actual right day. All right. Oh, sorry. So we went past EQ. We didn't sweep these lows, but we hit this nice order block right here. Perfect. Now you can look at this and go, okay, we have a nice little 5 minute for value gap right here. Inverses it. Okay, now we have a 5 minute inverse. I'll enter on this 5 minute inverse. You can put your stop at the low. But me, honestly, and this is just for me, okay? But I like putting my stop where my trade idea is invalidated. And realistically, price could sweep these lows. So my stop most likely would have been right here, like below this fair value gap or at the low. And then from there, you target your whatever your high, right? And then you can take TP there, and you can also like manage your risk along the way and something, and you can, because you're trending, technically you should be going higher infinitely, right? So you can trail this, and the goal of trading, again, is to stop your losses early and to let your runners go as far away as possible. You could target these highs here if you want. Did these get hit? They did. Now you just hit a 1 to 3 over multiple days. Now that's considered swing, it's fine, but you still hit your TP during the day, right? And if this was a live account, you could have held that. Now, I'm not saying you need to hold that, but let's say you were to take this same strategy and apply to a lower time frame. Okay, 15-minute trend. This. Okay, everything's lining up. My trend is bullish on the 15. It's also bullish on the higher time frame. Everything's looking good. Work with the market react. Okay, there's a 15-minute for value gap here, 5 minute for value gap, 1 minute inversion. Enter on that, and then from there you can target even higher. And I'll show you guys right now, right? Okay, everything's bullish here. We just switched to a bullish time frame. 5 minute, whatever. Work with the market react. We have a 5 minute for value gap right here that got created right after this inversion, let's just say, right? And then from there, do we get a 1 minute inversion? We most likely do, because this strategy, honestly, guys, is a game changer. You guys aren't even ready when you guys are actually going to start applying this shit. Where is this thing? Am I even going to be able to get to it? Who knows? Okay, there we go. We're just going to wait for the candles. You're going to tell me that it's cutting off right here. All right. We'll just get another one. Okay. So same thing here. 5 minute trend, whatever, bullish, right? We already saw it. Everything's bullish. There's most likely like a 5 minute gap. Let's just say there was. We'll go onto our actual time frame. You get a nice sweep of these lows here. Fair value gap here, 1 minute inversion. Now you're trading this on the 1 minute. You enter on the 1 minute inversion. You can put this thing at the 1 minute low. Again, I wrote put your SL in the right place depending on your strategy. Now, if you're entering on the 1 minute and your analysis was mostly done on the 15, put it at a 15-minute low, right? Which would be this low here now because this one was taken. keep your stop smart with your strategy. Don't go putting your stop on a 1-minute low if you enter on the 5-minute confirmation. Okay? Don't go putting your stop on a 1-minute low if you enter off a 15-minute confirmation. Don't do that. And if you're going off a trend on the 15-minute, again, do not put it on a 1-minute low. 1 minute could chop all at once, right? If your 15 minutes doing this, if this is what your 15 minutes looking like, and this is what your 1 minute is looking like, put your stop where it makes sense. So if you entered on this red circle here, put your stop here. I do not care what you think. I do not care if the RR is not the best. We're going for 1 to 1.3 RR minimum anyways, okay? And take your TPs at smart areas, okay? Don't TP here. Take a TP at this high. Take a TP at this high. And then let this thing run. See how far it could go. There's also these highs up here. Target those, right? There's these highs up here. Target those. And look at that trade for this day, right? Now, obviously, we would have been stopped out right here, but we would have hit TPs and stuff for stop break even, all that. But you guys get the point, right? We could still have hit this insane of a trade of a 1 to 7R just based off this. It's very simple, okay? It sounds complicated, but instead of having a bunch of complicated keywords, it's trend, bias, and draw on a time frame that you pick. Whether that's the 15-minute, the 1 hour, the 4 hour, the daily, the weekly, I don't care. Okay, where could the market react? Just go down slightly from that earlier where you guys were. So if you're on the 15-minute, this would be on the 5. If you're on the 4 hour, this would be on the 1 hour. If you're on the weekly, this would be on the daily. You guys get what I mean, right? And then from there, again, same thing. Zoom in. How do I enter? So if this was on the 5-minute, this is the 1-minute. If this was a 15, this is the 5. If this was an hourly, this is the 15. You guys understand what I'm saying? I'm gonna write zoom in here as well, just so you guys kind of understand better, right? So you zoom in as you go, and then on your confirmation, that's where you can use your inverse for value gap, breakout structure, CISD, changing the state of delivery, whatever you want, right? I have videos on all these things if you guys want to go check them out, by the way. 2 trades a day max, 1 win max. So if you win your first trade, you're done. Okay, but you get 2 tries. 2 tries at this. And this is basically how I've been living for the past 3 years, very comfortably, I might add. And yeah, basically TP smartly. Again, TP and SL is on the time frame that you analyze, not where you enter. So if you analyze on the 15 and it looked like this, your TP is at the 15-minute low, or your SL is at the 15-minute low, your TP is at the 15-minute high, and then you can leave runners to go higher. Okay, but your main TP is here. Once you've hit this, you can go break even and call the trade basically written off, and it's good, right? I wrote trail TSL at new low or where trade idea is invalidated. I'm gonna show you guys an example. Let me just pick kind of like a good example, right? This last week was amazing. October in general has been amazing. I'm basically undefeated in October. Insane returns. So let's say you enter here, right? On a bigger time frame trend, whatever, and your stop was at this low. We'll just use that. Like a 1 to 3, whatever. You're in this swing trade. Now, when your price hits your TP right here, you don't go break even. Where is your trade idea invalidated at this point in time? It's not at break even. Break even is nothing. It would be at this low where this white line is, because your trend only breaks if this low breaks, not if you go back to here, right? So, and then you can just from there, it ends up not coming back, right? But I actually have a video on my YouTube where I was backtesting with some students, and it did do that, and it went right past my entry, but not quite at my stop, and it went back to another TP, right? And then from there, you can keep targeting higher and higher and higher, and this thing is just undefeated strategy. I'm telling you guys, this thing will change the way you trade forever. Okay, the goal in trading is to be in the trade, get that market experience, and make money without overcomplicating it too much. Okay, so again, I'm gonna go over it one more time. You go for your trend, your bias, and your draw on a time frame that's higher than where you want to enter. Okay, from there, you zoom in. Where could the market react? That's any ICT keyword you like the best. F for value gap, rejection block, order block, OTE, equilibrium, any liquidity point, Fibonacci, support resistance, anything you want, moon cycles if you want, right? Previous day low, previous day high, previous weekly high, previous weekly low, whatever you want. From there, once price reaches this spot, zoom in. Now, how do you enter? Basically, what can the market tell me that confirms my bias and the trend continuation on a higher time frame? Now that would be your inverse value gap, your breaker structure, your CISD, etc. Right? From there, now you're in the trade. You take 2 trades max a day, you 1 max, you risk what you're okay with risking, again, within reason. We're not full porting, okay? You can risk 1%, 2%, 3%, 5%. 10% is a little heavy, I wouldn't. 5% is about the max I would go. From there, right? Put your SL in the right play, which is at that low that you analyzed, and put your TP at the high, right? 1 to 1.3 RR minimum, and trail your SL at new low or where trade ID is invalidated, right? And from there, guys, you have a whole trading strategy, which is my trading strategy. I've been living off of this for 3+ years. I've been trading for almost 6.5 years. You guys can do this, okay? I wrote it down. I showed you guys the trends. This is basically what we're trying to enter, again, right here, okay? This is where we want to enter. Target this low here, okay? We're not trying to enter here. We're not trying to enter here. Realistically, we're probably going to end up entering around here because we're entering on the confirmation, right? Again, we're not trying to predict. We're trying to react to what the market's telling us. Every minute that you're trading, the market is feeding you new data. Every second, I should say, it's feeding you new data, and you need to analyze that data lightning fast. So again, we're probably going to end up entering here. Our stop will be at this. I'm going to use this leg because it's easier for visualization purposes, but we're probably going to enter here, right? Our TP is going to be here. Our SL is going to be here, right? Now, this risk doesn't look like it's the best, right? Well, realistically, this thing probably goes like this. And we enter around here. Now, your entry is here, your SL is there, your TP is there. Now, this RR doesn't look good, right? But you can target higher than that. So you target your 1.3, ends up hitting. You could go break even here. You could even put your stop at this low. But the truth is that you're not actually sure that this low is where the trade ID is invalidated. So what you can do, what I do, is I risk 2% per trade, okay? But I put my first SL here. What that means is that realistically, I'm risking around 3.5% on this trade, but my real SL is here. So if there's a candle that closes below here, I'm out of the trade, okay? But once price hits here, obviously your RR is much better because technically your stop was here. It's just, it could wick this low out, and that's a shitty way to go. So I put my stop here to start with, and then once we have real good confirmation, you'll see me moving it up, and that's where my real stop is at. And then the stop stays there until we get this. Until we get this move right here. Or it could even do this. Until it does this. From there, now my stop is moved to here, right? And then let's say price does this, right? Because that's what trends do. Now my stop is here at this low, okay? And that is how I was able to live off trading and just basically live a great life. Okay, so I do recommend you guys to try this out. Let me know how it goes. Like, comment, subscribe if you guys like the video. I always post basically, and I also have a free Discord if you guys want to see me use this live and trade live. You can ask any questions. I always answer. And other than that, guys, have a good rest of your day, and peace.